If you're having trouble in the stock market and you can't decide and figure out where price wants to go and you get frustrated over it or stressed or get anxiety, here's a basic structure that you can follow every day coming into your day that'll give you a better basis and better conviction as to where the market wants to go. So a lot of you guys trade concepts like fair value gaps, break of structure, and liquidity sweep, but what you guys forget to understand is that these concepts are playing out on the higher time frames, like the daily, the monthly, and even the weekly, right? So with that in mind, we now know that these concepts are playing out on the higher time frame. Now it's important to figure out where these concepts want to deliver the price, because too much of you guys get caught up in the small time frames, like the 1 minute time frame or the 2 minute, 3 minute, 5 minute time frame, and you get stopped out and you wonder why. The reason why is because there was probably a higher time frame narrative on the 4 hour, daily, or weekly time frame that was being, prepared and structured on the lower time frame, and you had a different sight in mind, but you were wrong. So coming into market open, you're going to want to go on the daily time frame and just look at areas of liquidity, right? We want to see what did price fill in? What did price do in the last 3 daily candles, right? Where is price going to go now? Oh, okay, we had a move lower, so chances are we're going to come for this high. Look what happened. We came for the high. Assuming we're going to continue bullish, we're going to go to this next high. But we're also on the daily time frame, so we don't want to jump the gun and instantly assume we're just going to fly that high because we are on a super high time frame. So what you do is you scale in lower. Now, the way I do it is I like to get on the market and go on the 4 hour time frame and the 1 hour time frame, and I mark out session highs and lows from the previous day or previous week. As you can see here, this is last Friday's New York AM session high right here on the 4 hour time frame, as you can see. So I have that marked out. We also have a 4 hour London session high that just got sent out, or that just got swept out right here at this black line. We have last Wednesday's New York AM session lows down here at this line. After the 4 hour time frame, you also want to scale into the hourly time frame, and again, look for previous week or day highs or lows. Most of the time, your 4 hour lows are going to align with your hourly lows. Like as you can see here, these hourly lows line up with these 4 hour lows. Now, after you mark out your areas of liquidity on the hourly and 4 hour, you're going to want to scale down to the 15-minute time frame and look for any type of fair value gaps that we printed out. So as you can see here, we created this one all the way down here. Now, assuming price is going to push bullish up to this new high on the daily time frame, right? We're going to wait to see a retracement into one of these inefficiencies. After the 15-minute, you're even going to scale into the 5-minute, because look, on the 5-minute, what do we have here? A 5-minute bullish fair value gap that's above the 15-minute one, right? Price might not want to come all the way down here. It might just want to come here and then deliver to this high. You can even scale into the 3-minute time frame and look for a fair value gap. As you can see, they all just stack on top of each other. But what you want to do from here is wait for price to tap into one of these retracement levels and then scale into the 1-minute time frame and look for a reaction out of it. Now, obviously, considering where price is at right now in the current example, price has not retraced yet. But assuming price would retrace into here, into this 5 or 15-minute gap, we would look for longs out of there to continue up to this high. Now, here's the twist. This is where the order flow part comes in, and this is where you literally become the discretional trader god. Because you might be saying, what happens if price retraces into this area or even this area and doesn't respect it moving higher? Well, from there, that's where you read order flow and you say, okay, well, on the 15-minute time frame, we had this bullish fair value gap right here, but price inverted it after sweeping out these high time frame area of liquidities, right? Price inverted it. So what does that mean? If we inverted this bullish 15-minute, if we inverted this bullish fair value gap, chances are we're going to continue lower now down to the next draw on liquidity right here and right here. So all in all, I know this is a long video, but basically what you want to do is wait for price to tap into key levels, right? High time frame, highs and lows, right? From the previous day or previous week. And you want to make sure that these highs and lows that are being swept out were created during a session, the London session, the New York AM session or PM session, or the Asia session. This is not specifically tailored to highs and lows. You can also wait for a tap into a high time frame, hourly or 4 hour bullish or bearish fair value gap, right? And it's even better if those bullish or bearish inefficiencies, right, fair value gaps were created during a session, right? London, Asia, New York, PM, whatever. And all you do, so basically all you got to do is wait for price to tap into a key level, right? High time frame liquidity or high time frame imbalance. And then from there, you scale into the 5 and 15-minute time frame and wait for a retracement. And then you want to make sure that there's a target in the opposite direction for another previous day high or low, or high time frame imbalance, right? Now, if you're new to trading, everything I just said is a whole different language from a non-existent country. But if you know trading and you're in it, you know everything I just said, and it just helped you a ton. I'm telling you, this stuff works. I've gotten payouts, I've gotten funded multiple times, and I'm going to continue to do so all of 2025, and you should do the same. Also, another thing too, I low-key forgot to include this, but when you see a tap into these key levels and you want to take a trade, make sure you have a target. Make sure you have a strong area to take profit at. Don't just free ball the trade. You want to make sure you target another high or low or another imbalance, right? Because price is going to sweep out liquidity or tap into imbalance and then target the next one or target the next low or target the next high. This is how the market moves. It goes up or down at the end of the day, all right? There's no goated strategy. You just have to read order flow, read the higher time frames, scale into the lower ones.